What's up, Matt?
Hey, man.
What's up, Greg?
Glad to be back. Can you hear me okay?
I hear you perfect.
Hold
Can
on.
you see me?
I can't hear you. I got to
Can you see
change
me
the
now?
sound settings here.
I hear everybody, see everybody. I'm just bringing up my LinkedIn over here.
I need to change it on the settings. Here we go. Audio output. There we go. All right. Keep talking.
Can you hear us now?
Yeah, in my headset. It was coming through the speakers on the laptop, which didn't help. But you can hear me okay.
Yep, we hear you good. We hear you
Greg,
good.
what are you drinking there, buddy? Looks green and healthy.
Yeah, my green juice. Drinking my green juice. So, how was the week on the road, Matt?
Oh, a lot of driving. It was
Yeah.
it was enlightening though, and it was good to see what I like to go down there, and I like to meet people. I like to see what I'm dealing with, and I like to kind of scope out the entire situation with my own eyes. It's one thing to hear about it and read about it. It's another thing to actually see it and touch it and
Sure.
talk to people about it. I'm a hands-on kind of person. I've always liked to travel to visit my customers and get to know reload people. Hey, if you got a problem, it's nice that you shook a guy's hand one time and you can refer to him by name and say, "Hey, buddy, I need you to help me out on this." Unless you've actually been there and met him, you can't do that.
Right.
What any revelations that you can share with our listening audience today?
Oh, I would say, and this is not a surprise, if your business is tied to single family housing in any market, whether it's Texas or Colorado or Oregon, your outflow of material slowed down considerably over the last 90 days. And if your business is tied to multifamily and commercial stuff, it's skipping right along. There's been some delays, but those are weather related. Sometimes they're labor related. Sometimes they're materials related, but I don't think materials are really a problem anymore. I did see a reload down there in Texas that was full of siding, which kind of surprised me to the point where I called a guy, a friend of mine down there, who was complaining to me last April when I was down there in his office about how siding was unviable and everybody was on allocation. I'm like, "Hey, buddy, I found your siding." And he's like, "Yeah, I bought 9 trucks of it." So nothing cures high prices like high prices, right, Greg?
I was just talking to one of the guys you were down there at in Texas, and it sounds like there's not enough inventory down there, Matt. Or with carload problems, if everybody decided to buy again at one time.
I think there's some inventory in a couple of places, like Mountain View. The reload I use is full, but that's because they had a 25-acre yard that they were going to open that failed. They had a big storm down there, and it kind of washed out all the groundwork that they'd done, and they couldn't use it. So they've got extra wood that they had to bring over to their 7-acre yard, which is now full, right? And then there's a reload down in San Antonio called Southern Warehousing, which I've used in the past. It's a fairly large interior storage reload. Some of the job shipper types use it because your stuff's not outside exposed to the sun. It was completely full, so that just tells you that some jobs got delayed because that reload's primarily for apartment job type guys. But for every other reload I went through was medium to low inventory. And I think the guys that are the track home tied into the track home builders have a little bit more inventory than the guys that are just doing the ma and pa, building them one at a time and doing custom work. Those guys are really busy.
It's
really
interesting,
busy.
Matt. You and I have a mutual friend along with Greg. It was just a couple people were just telling us, talked to a handful of people down in Texas and other places, and they're starting to get more POs from the track builders that weren't giving them for the last few months. Does that make sense?
Yeah, and they came out and they announced it, on a week or two ago. They said they planned on starting more stuff in the fourth quarter. So we'll see if they hold to their word. But the demand for housing in Texas isn't slowing down. Okay, so what's really happened here in the last 2 to 3 months is that spec homes were built, right? Their homes were built without buyers. Also, some homes got built for buyers who then canceled. So those homes have had to be sold here in the last 90 days, and they are being sold. That's the good news, right? They are being sold. Some incentives have been given, maybe some small price reductions. They might throw in some granite, countertops to get the guy to sign. Work with the points a little bit. Who knows what other things they're, but they're wheeling and dealing, and the inventory's going away. As long as the housing inventory keeps getting moved, then they'll keep building. And I think we're starting to see that transition happening right now.
I guess the other part of that is that, as we've been talking about for a long time, the amount of homes, record number amount of homes under construction because of the increase in cycle time, and that disparity between completions and starts that created that's in the process of rectifying itself. And as we chew up the ones that are started but not completed, push that through the system, we'll get more right size. And I guess to Matt's point, I'm hearing that depending on where you are, there's a wide disparity in what the discounting is that's going on to move stuff. But Matt, you're spot on. The big builders are going to keep building homes. They're in the business, like lumber mills are in the business of making lumber. Home builders are in the business of building homes. And, as their costs come down on the material side, eventually maybe they'll get some relief on the labor side. The one thing that there is not a lot of relief for is the cost of land.
Right.
That's a little stickier.
Kyle was asking you
also,
Matt,
because I'll get to Kyle in a second, but I want to go back to what Greg just said.
I just didn't know if you could see it.
Did you just dismiss Kyle like that, Matt? Did you?
No, I want to talk to. I want to talk. I saw the question pop up, and it's a great question. But you said something right there that caught my attention, and I wanted to go back to it. The other thing where the costs have gone down is building materials, right? So, if you're a apartment guy and you're trying to figure out what it's going to cost you to build a 400 unit job in February, well, Futures is telling you it's going to cost you like $430, right? That's a hell of a lot better deal than last year at this time, or the year before at this time, or last spring, or last June. I mean, we were at 1,400 not that long ago. Now we're near 400. So that takes a lot of the math away from these guys, and it takes a lot of the fear of the unknown away from them also going into the first. I'm pretty bullish on the first quarter because of that, right? I think that the combination of bad transportation and increased demand in the first quarter might surprise some people.
Matt, Ashley knows this, but there's very few times, and you probably have noticed over the course of time, there's very few times that I get up on the table and I jump up and down and say, things are a screaming buy. We're not there yet, but to your point, I go back, my stat is that, realistically, if we look as the last week in September to our Thanksgiving, is historically a market bottom, and then you make a high sometime in mid-February till early April. I mean, you can take 10 years and get, 7 out of 10 of them are going to fall in that general area. I mean, the one thing I'm really looking for is, a premium on the board to the cash market.
So Greg, did we converge yesterday? Here, I had a bunch of people asking me yesterday nobody really knows where 4-inch cash is right now. And nobody would know unless they were bidding on it, right? So did we converge in the last day or so on cash?
Yeah, the markets come much closer together right here. Reality, and Matt can probably point to this. There's no big volume buying going on. All of the yards are in the same place in that they're buying exactly what they need. Their inventories are in pretty good shape. Probably maybe too good a shape in some cases. But if you look at the environment, there's nobody that's upstairs with a eye shade and crunching Excel spreadsheets that's saying, hey, it's okay to buy inventory. They're all saying you should reduce your inventory. And guys are saying, well, yeah, but we're at pavement already. Yeah, get it lower.
Yeah, it makes you wonder if there's some more mergers going to happen. But let's get to Kyle's question. Kyle's good question there.
Matt, real quick though, you saw Chaleur and Interfor yesterday, so we've started the merger of the Eastern Spruce Mills yesterday.
You know, Interfor's quietly gotten a lot bigger, dude.
Yeah, they bought Chaleur. I mean, that was a small or a good sized stud mill. I mean, Greg, you that just came out yesterday.
I mean, look at how much production.
I wouldn't be surprised if there's just like independent lumber yards have cashed in, selling at big multiples on all-time record earnings. If you're an independent sawmill and someone's willing to pay you a big multiple on all-time record earnings, then, you probably want to say thank you and accept that offer.
So, Matt, what's your thought for Kyle's question? I don't want to leave him hanging there.
No, not at all. That 7-acre yard is really capable of holding about 19 to 21 million board feet of lumber if it was full, right? And the reason I know that is because Mountain View has had the Irving, Texas yard for 20 years. I've used that yard, and I know my customers have used that yard many times. The Cleburne yard is a new yard. It's the same size as the Irving yard, and the Irving yard record capacity, I think the highest it ever got, like in 2018 when we had all the bad weather, was like 22 million. So
that's almost 200. That's 200 carloads of lumber.
Yeah, a 7-acre yard can hold comfortably, 150 to 200 carloads of lumber. You get past that, you're kind of looking for, you park it out the gate or something, who knows.
I always had a ballpark of like 1 million feet per acre. That's that, and you're like saying it's double that. You're double that.
Oh yeah,
you're doubling
triple that at times. It at times it's triple. Currently, I think Mountain View Cleburne has 25 million board feet on the ground. It's full, okay, but it's a victim of their own success and the failure of their 25-acre yard that was going to be built. But they're. I mean, I just talking to them. They're breaking ground on a new facility. That will fix itself, right? Meanwhile, you drive over to Reload or WSI Reload, and they're average inventories. They've got room. So it's just one reload. That one reload had some peculiar circumstances not normally happen. So it doesn't mean anything. In the big picture,
one reload does not make a market.
Right, and I don't think that Texas in general has enough inventory on the ground, unsold reload, to make a thing. It could all disappear in a week, and then you'd have to go in and rebuy, right? But right now, that's not really the case. People are still in the process of digesting their inventory and listening to what their boss says, keeping their inventory low.
Well, Matt, one of the things that, we talk about, and I kind of wanted to, I saw a bunch of news stories, and this is we're going to pat ourselves in the back, Matt, Greg, myself here. I saw a big breaking news story yesterday on one of the big publications, how large builders are selling to investors now. Did you guys know that? If you would have been on the show 6 months ago, you would have known that, right? Yeah. I mean, it's crazy, but what it led me to believe is, like, the stuff we talk about on here sometimes we're seeing in real time that sometimes people don't see 6 months later, right? Does that mean, we're not always right on it, but it kind of made sense. It was pretty cool.
Are they also talking about the rent to own model?
Yeah, well, they're talking. Well, yeah, they're talking about all that kind of stuff, right? But it's interesting. One of the things I think, Greg, that you said to me the other day that was kind of interesting was, I'm selling and I'm listing stuff and I'm getting aggressive on things, but I lost some orders, right? Which you and we've sat together before. It's like people are willing to go that deep under the market on stuff. So it's usually a sign that something is happening. All the people you used to have on the trading floor, when when Bob took an order or whoever, you knew that the market was going to turn, right? But I think there's a lot of that going on right now, right?
Yeah, I mean, one of the things that's been really impressive to me over the last several months is how deep and how liquid the market has been against the backdrop of like all the negative data points. I mean, I will say that I feel that we've taken a step back in terms of the depth of liquidity in the last week or so. So, Ash, is that a precursor to getting to a place that, oh, there he is. We got him.
Hey guys.
All right. I was just sending you a text, Kyle. I figured we'd bring you along for the run. No, good, great points there. I think you
What's
can,
up, Kyle?
You could,
hey guys.
lend some great input into here. What we're talking about.
Can't you get a better intro than that, Ash? Than they just drop the guy in?
He just showed up. Whoa!
We're supposed to build him up and talk about the legendary.
Wasn't I just answering your question?
No, look, it was a good question. I thought Kyle, he's got a lot of good input here, and everybody knows Kyle from Sherwood, and let's continue here.
Yeah. So, anyways, I appreciate you guys having me on. Thank you for the impromptu invitation.
Yeah, no worries. So one of the things we were talking about, I was talking about talking to people. One of the things I keep hearing from people is, "Hey, I'm looking for value," right? I'm like, okay, what does that mean to you, right? Because, and then I had a conversation with somebody in Georgia yesterday. 15 minutes, I'm not buying anything. The last 5 minutes of the conversation, they told me about how much they bought that day. Right?
Yeah.
So there is value out there. There are people buying things, and that may just be I did a terrible job on the sell side too, right? But the point is, there's people buying every day, and I say this to our sales group and all that. It's not as bad as it seems out there. That makes sense. Look, I talked to 2 people in Omaha yesterday. They're so busy on multifamily into the first quarter of next year, and I said, "What about your single family?" And the guy was like, single families, slowed down a little bit, but we really like the multifamily, right? So you're hearing little things like that. And of course, Matt, as you said, if you're tied just purely into single family, you're probably feeling it a little bit, right? But things seem to still be flowing pretty good and moving along. Thoughts there?
I mean, I just to kind of add on to what you've already said. I mean, from a multi-family commercial type business model, our customers are thriving. In fact, they have more business than they probably can take right now in most cases. I was recently at a conference speaking last week and talking to a few different builders / truss manufacturers. Those guys still have order files that are 10 and 12 months long. And so the capacity for that multifamily mixed commercial component, wherever there's lumber framing involved, they're extremely busy. And the remodeling of the variety of different, the work from home, phenomena, I mean, is still there, but more people are now going back to the office. So that's requiring additional changes to those spaces. It's requiring additional thought process inside of some of these, I want to say metropolitan markets, but more of the suburban markets, because it does seem like people are more in the suburbia now, and some the people that, or I should say, the distributors or retailers that are servicing those markets are doing extremely well. So, I guess yes, we're technically in a housing recession because we're seeing growth slow, but it's not doom and gloom by any means. I mean, our sales pace is off from the peaks, but the peaks were insanely high. So, but I would kind of mirror what Matt said earlier. I'm very bullish going into the first quarter of next year because I think the marketplace, generally speaking, is becoming more complacent. The pendulum has swung to where they're conserving cash, and we're going to have logistical challenges, and there are going to be surprises. And to Greg's point, we're not so far away from like drop dead value. So, I think the smart guys are really taking a lot of their risk off the table, and as they should when you have a market that's come off as much as we've seen over this year.
So one of the big kind of questions that I keep asking myself, guys, is if we look over the last couple of years, which has been historic by every stretch of the imagination, and we go back, Kyle, Matt, Ash, we've got a little bit of history, and there was years where the entire year's range was $100 and or less, and one of the things that keeps rolling around in my head, going, okay, so are we going to go to a price level and I guess I just say just lie there in a $50 or $60 range for some extended period of time as a payback for the last 2 years, and then what does that do to the business models? What does that do to the people that have been in the business the last few years and forgot about that's the way it used to be?
It's
Thoughts,
I mean,
feelings, opinions.
I think my
the
opinion is that I don't think that's going to happen with the way the CN, the BN, and the UP operate their businesses anymore. And I don't think that there's a whole 20,000 high school kids that just graduated that want to become truckers in America either. So I don't really see the transportation component of our business improving to the point where you could have a $50 range for a year or a $100 range for a year. I just think that that's impossible given the transportation challenges that we again will face, right? And when does that happen? It starts when the snow flies, right? For whatever reason, the CN doesn't know how to operate when it snows, even though they're a Canadian company. I don't really get that one, but somebody will enlighten me someday on that one. Go ahead.
And
Kyle.
I would just add,
if you provide shitty service, then you can raise your rates, because I mean that's the business model that I've identified. Is that I mean if I could figure out how to do that with my business, I'd be a gazillionaire.
Look, we'll ship it on time no matter how long it takes. Okay.
I think there's definitely a possibility we could trade in a tighter range, but to be in a $50 or $60 range would mean that we'd have to be at real equilibrium. And I think the market is really struggling coming out of a supply side challenge to determine what's right for the a declining demand market, but not really clarified where that declining demand is coming from, because even we talk about our multifamily component and the mixed commercials being very, very good. I can't say that, the national home builders, generally speaking, are hurting in any major way. You look at their earnings reports, they've ever made more money than they've ever made recently. They're selling more to investors than they ever have in the past. So they're looking for new ways to keep their inventories low. And if they keep their inventories low, they have pricing power. So this idea that we're going to see these major drop-offs because of so much inventory in the system, I don't know that that's necessarily going to play out that way. Yes, there will be negotiability, but are we going to see 30, 40% drops? Probably not. 10 to 20 in the heaviest of markets, possibly. But in the majority of the markets, you're talking about not much more than a 10 handle, I don't think.
Right.
It's a real. David Stelkop said most European sawmills are saying they are going to increase their production and shipments to the U.S. in 23. Sweden alone produces 11 billion board feet of lumber per year. If their market in China and the Middle East are not buying traditional volumes, they will want to ship even more of their product to the U.S. Central Europe mills already announced increased volumes in the U.S. in 23. If the European mills are going to be that much more aggressive at shipping in the East Coast and Gulf states, and their premium quality spruce is gorgeous, how will the BC SPF mills be able to compete at current market levels? Buy them?
We're already at peak volume. They can't ship any more than they're shipping. The capacity isn't there at the ports up and down the East Coast and the Gulf. So, unless they find someplace else to send it, that's going to be problematic.
And we're talking about 1.6 billion board feet on a 60 billion board foot market. It's not. Right. I mean, I know it's a lot of 16 footers because of the 5 meter logs on the eastern seaboard, but in the grand scheme of things, for overall, wood products usage in the United States, it's still a small percentage.
Right. And then with Greg's point about the ports being jam full, that's to do with labor, right? I mean, we've dealt with the Port of Houston, and I don't want to say any more about it, but suffice to say that I don't think I'm going to be unload vessels at a time in Houston anymore. I mean, those that's
Yeah,
not
Matt,
working
we've
for me, okay?
we've worked on something for 6 months now.
It's
Well, so,
working for me, and I don't think it's working for anybody else. So
Kyle, is it 1.6? I thought it was. Is that where we're at? Because remember,
Roughly, yeah.
we were at 4. Think about it, we were 4 billion in like 2005.
Yeah, it's not. It's just getting back to where we were in the early 2000s. There's a lot of economic forecasts that are saying that that's actually going to drop by 20 or 30%. I don't believe that. I think they don't have very many options to ship anywhere else in the world, and the U.S. market has liquidity and a strong U.S. dollar, which continues to bring more imports to this market anyhow.
Christopher Blath, BLADH said, "Hi, David. We've already turned more volume to the U.S." And it's like, yeah, right. You can only ship so much, right? Mark Ross, Matt, he was asking me. This is something I don't know anything about. Where do you think the November contract will close?
We should have a poll.
Yeah, put a poll up, Greg. I don't know.
Yeah,
I'm
I have
guessing.
no idea.
Where is it right now? Let's go look. Hold on a second.
It's 430. It's the same as printed cash. Yeah.
Is that cash, Kyle? 430.
Yeah, I mean, that's what print is, 425. So you would say that we've had convergence, and now it's
it's a long way till the middle of November.
Yeah.
I'm guessing about here, maybe a little higher. I don't think it's gonna close significantly lower than 4. I'd say 400 to me is kind of the Mendoza line. We could go below that for a while, but I don't think 400 is sustainable for mills in British Columbia, which is where the contract is based, right?
Well, this is a point that I've been making to people is, when we talk about, today's numbers and, if to Kyle's point, if we reset and we go, okay, we're not going back into the 200s, that we're just never going to go there again. So then if I look at that, you drop below $400, that's a big circle, which it just says, okay, I'm a scale down buyer, accumulate, got a hunch, buy a bunch, right?
Yep.
Yeah.
Or fast forward me 30 days, and almost kind of wherever we are, it's a buy.
Yeah. Seasonal.
Yeah. That makes. Hey, so 2 questions from Twitter, and one of them, first of all, I hope everybody was safe in Florida, and our thoughts go out to everybody down there. Somebody keeps asking me the question, what is Florida rebuilding going to look like? I can just say from my history, it's always been, it happens, but it's always a lot farther out than you think. It may be different this time. How is that affecting currently and going to affect the supply of lumber or the pulp market?
I'll just make one comment about 2 anecdotal things that I've heard, that I've seen. One was from a friend of mine that showed me pictures of the day of, and then yesterday. And, he's talking about there's areas in the Naples that you almost can't even really tell that anything's happened. And then I've got a customer who sent me a picture last week with the yard totally destroyed. And today I got a note that, they're open back for taking deliveries.
Hey,
so I just think Florida, is tremendously resilient people. They're going to get up and be going back in business faster than anybody thinks.
Kyle, so David said we need to have Kyle on more often. What a great group of 4.
Hey, thank you.
That's
but just to go back on that November contract, if you had to say, higher, lower, or sideways, I would be in the higher camp. Where we're going to close in the November.
It's probably going to close at 250 now that we all said that.
Probably, yeah.
Way to jinx us.
Sorry.
Way to go. It's like the Monday Night Football. This guy hasn't missed a field goal in 7 years. Oh my God.
The real question is,
there's a streaker on the field.
Question is, what's January going to be when November expires? Last year January was $100 and something over the November. If you remember, was wild.
I honestly, I forgot.
It was. It was historic. One of the best basis trades. I've never lost so much money being short a great trade.
Yeah, right. You never would have thought that.
I mean, like, how can you lose that much money with that big a winner?
That's funny.
Mike W was saying 65% of the short open interest in the hands of managed money commodity funds.
Yeah.
Yeah.
I mean, that is
Well, the industry wants the long side of 400, and the outside industry wants to sell the slowdown in single family. It's that
Well,
simple.
I mean, if you look at, I mean, if the market's trying to put in a bottom, technically a close above yesterday's high would trigger short covering by the funds. And, I mean, I could build a case that November could rally to like 470, 480 range, which would be a downtrend line, right? I mean, and be a premium to cash. The real question is whether January would be over 500.
Yeah, I say another question from a new YouTube person. They're asking about the BC lumber log prices, and were mills waiting for BC log prices to fall down? I heard that from 3 people yesterday. I don't know enough. We usually have who do we usually have on for that?
Russ Taylor.
Russ Taylor usually
Taylor.
dials.
He's our man. He's our man in BC.
What are BC log prices doing right now? Is there?
I don't know the exact number. They're down. I think they have been adjusted down lower, but I'm not sure the exact amount or percentage. I don't know the amount or percentage, but I know they're lower.
Ash, we've talked about this before. With like log prices and what the duty amount. That's kind of like constantly changing. And the interesting thing is when lumber prices are higher, log prices are lower and duties lower, and then vice versa, it seems like. But it's over any short term, it's kind of meaningless.
So in the big picture, British Columbia is a shrinking province. I'm telling you right now, there's a reason why those companies have been buying assets in the United States and Alberta and now Eastern Canada. I mean, they're not reinvesting in British Columbia. We're the only ones dumb enough to do that. We're opening up a new stud mill, but everybody else is shutting down their sawmills.
I hope none of your guys watch this, Matt.
I'm sure they do. I'll be called into Porter's office here in about 5 minutes after this is over. What are you doing?
Oh, Mark, I said hello.
You know what? You guys are smart like a fox. You know what? You're zigging while everybody else is zagging. That's it.
Just real cool. What I'd like to do, we're getting there half an hour here. I'd just like to go around the horn. I'll start out. One of the things that you're seeing, that each person is seeing, that maybe could mean something is changing. I guess I could start out and say, I made 30 phone calls to people yesterday. Everybody told me that they were going to sit and wait to buy when it becomes a great value. Very rarely have I been in this business tilted so far to that side. And we have this underlying fog or schmegma over us where everybody's waiting for the next bad thing to come out. And I don't see these reports coming out that bad, right? So, Matt, you were just down in Texas, and I talked to people all over this morning. They're transferring inventory. They're running stuff to the ground. They're big yards that used to be independently owned that would have bought already, but they're not because they're trying to keep powder dry for other acquisitions or wait until from the upper echelon it comes to buy stuff. To me, that creates, and then, listening to you and Kyle talking about if everybody wanted to buy something at once, these cars, I don't think would be able to ship them. Right now, I heard people that are selling units of 2x4 16 premium are getting huge premiums to these small yards, $200 over print because they need them, right? So everybody's sitting waiting to do the next thing. So personally, if you ask me what the next big move is, I would say it would be up. I mean, I don't think that's putting my neck out there right now because we've traded off so low. That was my bit of advice.
I mean, our industry's funny. We want to all own it at 1,100, and everybody wants to get rid of their inventory at 400. Think about that.
They couldn't have enough. They wanted 90 days of inventory over $1,000. Now they want it less than 30, under 400. I mean, it's crazy.
Matt,
I'm sorry. I like to point that out sometimes.
Cars to fill all the $1,500 number 3 orders. that you had. Couldn't get enough coverage for all the cars you had.
So what's your little thought there, Matt? Then it's just this mindset, right, of where people are.
I just think our industry's always been like that. I mean, this isn't new. I've been doing this for almost 30 years, and we're always predictable. We don't want to go long and buy big volume really depressed. We only want to buy big volume when everybody's clamoring for it all at the same time, and we're just sort of creatures of habit, you know. Now, if you want to be a professional speculator, let's say you're the guy in Vegas that's setting the betting lines for the NFL games. Do you think that they look at the NFL games the same way as the average bettor does? No. And if you want to be a professional speculator in lumber, you want to pay attention to these types of trends. You want to start making your bets based on long-term trends, not on short-term trends. So that's all I'm going to say about that.
Greg, Kyle.
Go ahead, Kyle.
You want me to go? I would say that speaking the market surprise next, I agree with Ash. It's up, and I think it's up a lot bigger than people could imagine. Because right now, the majority of the industry doesn't think we're going to get it can get out of its way. There's many people that it's going to trade sideways for a long period of time and what have you. But if you look at any psychology of a market and you look at and apply that to a chart, whether it's a commodity or an equity, we're in the stage of get out of the way, full capitulation, right? Like that's where the market is right now. Nobody wants to own anything because they do not see any light at the end of the tunnel. And then all of a sudden they realize at some point it realizes that business or the price is a good value. Somebody comes in and it changes and it just gives it that spark. And when that happens, it creates momentum from the short side, which ultimately takes it to a price that goes a lot higher than people think. And I believe we're going to see that in the next quarter, maybe 2 quarters. And where we are, if you look at moving averages, the price that it can move back to, there's some big jumps that this market could take. And I don't think infrastructure is in place to go out there and support a smooth supply to the marketplace. So therefore, it's set up for another volatile little run. It's a bear market move. Don't get me wrong. We're still in major consolidation long term, but from a seasonal perspective, we're set up for a substantial bear market rally right now.
Kyle, I think that's a great point, what you just said there. There's been some crazy rallies to the upside in bear markets, and especially when they get wound as tight as they get wound right now. So that's a good point. Greg, what's your thoughts?
Hey, Ash, before you go there, I just want to add one thing. I tweeted yesterday, which a lot of people aren't talking about. Everybody's talking about how bad China is right now, but their PMI numbers came out this month at over 50, which typically is talking about expansion as opposed to retraction. So it's only 1 month's bullet point or data point, but you want to probably follow that trend because if their economy starts to pick up at all, that means the world's going to pick up. So.
And Kyle, you're at which one is your Twitter handle on that?
I'm at Lumber Little.
Gotcha. At Lumber Little at Twitter. Perfect. I see it up here right now. I'll have to comment on that. Great point, Greg.
Can you add Big Little Lumber? I mean, can you?
It was taken already. I didn't look it up.
I want a better handle for you there. Wow, man! You know what? I mean, this is the Bulls are running wild right here on the.
You can take the other side.
Well, I'm sitting here. I was thinking. I'm going. Shit. I go. This is great because I actually have bought more lumber in the last week than I bought in a long time. So these guys are pumping that up. That's good. But I'm back to my whole thing. I mean. Listen, seasonals are favorable. Overall price levels are favorable. 7 out of 10 years, the third week in October is the seasonal low in lumber. First quarter, the market sets a seasonal high. Okay, I got that all at the wind at my back. And I guess I'm all in with you guys with my caveat that I'm not. I think my risk is that I'm right and we trade in the narrow range as opposed to we blow out. And so, I think, I'm going to be prudent and, plan for the worst. And if you guys are right, I'm going to do a little jig for you.
Good to go away.
Good stuff. Well, Kyle, thank you so much for coming out. We'll have to make this regular. Greg, thank you. Matt, thank you. I'm heading out to Seattle tomorrow morning, so I'll be out
Skedaddle
there
to Seattle.
checking out the islands off of the coast of Seattle. So hope Matt or Mike will work with Matt Lehman on Lunch with Lumberman tomorrow at 12 o'clock Central. And guys, again, thank you so much for taking the time out of your day. It's
I'm out next week, guys. So I'll have to like check in from afar.
sounds great, guys. Have a great day.
Thank you.
Thanks,
You guys.
You guys.
Bye.
Yeah.